Welcome to Rappler Presents HIPE Stories, a show about high-impact Pinoy entrepreneurs. In partnership with Rappler, we bring you the entrepreneurs who dream big, scale up, and pay it forward here in the Philippines. I'm Manny Ayala. And today's guest is Nate Clarke, the CEO of GoTyme, a digital bank that is a partnership between the Tyme Group in South Africa and the Gokongwei Group here in the Philippines. Nate is a co-founder of GoTyme's parent, South African-based TymeBank, which is Africa's largest digital bank. And he's now a proud full-time resident of the Philippines, trying to replicate that success right here in the Philippines with GoTyme. In this episode, we'll explore Nate's journey from starting up, then scaling up TymeBank in Africa, to leading GoTyme in the Philippines. We'll also get his thoughts on the future of banking in the Philippines. Welcome to the show, Nate.
Thank you, Manny. Thanks for having me.
Okay, so the natural question looking at you is, what is a blue-blooded Bostonian who went and ended up working in South Africa doing here in, what's he doing in the Philippines in a company that's a joint venture partner with South Africa based out of Singapore? Anyway, there's so many roads. I want to know your story.
Yeah.
How did we get here?
I still ask myself that, I joked with my mom that, I said I'd be gone for 3 months 13 years ago, and I'm always moving back next year.
Yeah.
So my journey in this started in 2010. So what was that?
14
years ago.
Yeah.
I was a Deloitte management consultant. I knew I didn't want to be in management consulting in the long term, and I'd always actually had this passion for doing something that had a bigger impact, in particular, ideally, emerging markets. I attended a conference in DC. It was called Tech at State Mobile Money, and the founders of M-Pesa, which was the first really successful e-money, e-wallet business in the world.
In Kenya, right?
In Kenya. They were speaking there, and I remember turning to my colleague after, having a drink, and I said, "This is what I want to do. This is amazing. This is going to change the world, change financial services."
Can I ask you where that comes from? Why did you want to do that?
Because it was just, I saw how powerful and the potential in the statistics they were sharing, that a country went from 5 or 10% banked to 60% in 2 years. And maybe taking a step back into what are the fundamentals of what makes digital banking so disruptive. I think if you look at what are the key decision criteria as to why you choose a bank or to bank at all. Number one is, can I have access? Can I go to the branch, or now, do I have a smartphone to sign up? Number two, I think, is the pricing. Am I getting value?
Yeah.
Number three is the customer experience. And number four, and probably most importantly, is the trust. And what I saw, the founders of M-Pesa saw, is that increasingly the friction, in particular of number one, is going to completely fall away. If you think about what the competitive advantage branch-based banks have, is that you have to go to a branch to sign up. It's expensive to roll out lots of branches.
Yeah.
Originally, it was very difficult to move money from different branches. So therefore, if you weren't the best on customer experience and service, you weren't well priced, it didn't really matter because you were stuck.
Yeah.
But now, fast forward to a world that is we're not there yet, but if I think 10 years ahead, in a world where it's very easy to switch your bank because you can move money, like you can in the Philippines, between any bank in real time for free. You can sign up for an account from a smartphone. Those who can give the best value and the best customer experience and still can deliver on trust are going to disrupt these incumbents and make the market much bigger.
Well, so how do you go from attending a conference, being inspired by M-Pesa, to starting a company in South Africa?
Yeah, so with a lot of luck.
Well, this is part of the entrepreneurial recipe, right? There is a lot of luck.
Timing, luck.
Yeah.
So I kind of hustled my way on this mobile money project that had been started in Deloitte in South Africa.
Yeah.
And they were incubating a mobile money or e-wallet, like a Gcash, in South Africa for MTN, the biggest telco in Africa.
So you wormed your way into the project?
I wormed my way into the project.
From the US?
From the US.
Wow.
Convinced my partner that we're going to learn from this. Let's do it for pro bono for 3 months. Just send me over there, pay me, we're not going to even charge them. So they let me on the project. an independence issue came up with Deloitte and the partner bank, so the project had to end.
Yeah.
The telco still wanted to go launch this business.
Yeah.
So then myself and a bunch of other South Africans spun off to start Tyme.
Okay.
And actually, we spent our first chapter of this business, because it's been a long time now. It's been, as I said, 13 years since we founded, almost 12 and a half. The first half, we were B2B. So we helped build MTN Mobile Money in South Africa, but it wasn't our brand. We didn't have a license.
Yeah.
We did the same in Namibia, and it wasn't until 2019 we got our own bank license.
I see. And
Yeah.
how did you guys talk about your dream back then? What was the dream?
So the original dream, because we were initially attached to a big telco, was make banking as accessible as mobile communications.
Yeah.
The core of that hasn't changed, but it's evolved. I mean, now what we say is we want to maximize the potential or unlock the potential, the financial potential of all South Africans, all Filipinos. In particular, we're focused on emerging markets because we think that's where the biggest impact can be had.
Yeah. So why did it make sense to start a digital bank in South Africa back then?
South Africa, like many emerging markets, including the Philippines, the incumbents were not providing a great service to the traditional banks. Were not providing a great service to middle class and lower income individuals, even mass affluent, emerging affluent. So in South Africa in particular, every bank had a monthly fee. So there was you couldn't get a checking account for free. It did not exist in the market. The banks were not paying competitive savings rates. And they were also charging exorbitant fees even to move money around. Yeah. So it was a construct, it was an oligopoly, and the customer service wasn't great. You had minimum balances to open an account. So we saw this massive gap in the market.
Just out of curiosity, what percentage of the population at that time was
at that
banked?
Time,
yeah.
It was probably about 65%.
Okay, so higher than the Philippines.
Yeah, still,
but
even
still,
back then, yeah.
But still an entire third.
Yeah, huge.
Which is off the banking system.
Yeah.
Okay, and what were the major challenges in getting this thing up and running? Under the brand TymeBank.
Under TymeBank. Yeah, I mean, I think the first is we didn't really know that well what we were doing. It was the first time around.
Yeah.
I'll get to Philippines later, but it's definitely easier the second time you did this. Getting a license took a while. And it was I would say it was growth pains. It was mostly good though, because what happened was we went with a strategy which is quite unique amongst digital banks. What we saw in South Africa is that the most successful domestic remittance players in South Africa were supermarkets. So very similar to the role that pawn shops play here.
Okay.
If you want to move money from the city where you're working to your grandmother or your family in another city.
I go to a grocery and I say, I want to send this to grandma?
Exactly. That's exactly.
Oh.
So the biggest supermarkets, they still to this day dominate cash-to-cash remittance.
That's interesting.
So you go in, you give money, you get a code, you share the code. So we said, okay, well, that's very interesting because effectively these supermarkets are acting like branches. So then we had the idea to leverage that same infrastructure they're using for remittances and leverage it for banking. So when we launched, we had your typical app sign-up process like every digital bank in the world, but we also integrate into physical retail. So we have a kiosk like we have here where it can do full sign-up. It issues you a card, which meant in South Africa, even if you didn't have a smartphone, you could still get a digital bank account. Yeah. And then all of those cashiers and till points do real-time affordable cash in and cash out. Yeah. So we kind of turn a supermarket into a branch.
So at what point did you guys tell yourselves, we are onto something here? Right? And was there ever a moment where you guys looked at each other and said, what the heck are we doing? We should just pack up.
It was almost right away.
Almost right away what? Exponential growth or let's pack up?
And because what happened was the first phase, so we got the license, we started operating our big supermarket partner, Pick n Pay, who had, let's say, 800 supermarkets. We started operating their remittance play first, and we put kiosks in 650 right away. We got the banking products, we turned it on, and we made a big mistake because we turned it on everywhere. And we thought most people will sign up via digital, and only 20% of our customers will come through the retail channel, the kiosks. But the retail channel exploded, and we ended up, of the 10 million customers in South Africa, I think 7.5 have signed up through the supermarket channel. So it was a rookie mistake. We grew way too fast.
That's not a good thing?
Well, we just weren't ready for the scale. Okay. So, kiosks, we couldn't get anyone to make this kiosk. So we manufactured it ourselves. It was not industrial. It wasn't ready for scale. Cards were getting stuck in the machines. Our call center was about a quarter of the size it needed to be. So it was, the first 6 months were rough.
Yeah, but nonetheless, right? I mean, if you look at where TymeBank in South Africa is today, right? It took you only 5 years to get to 10 million plus customers.
Yeah.
And so my question is, how did you do that? What were the things you did that made customers say, yeah, I wanna sign up. I'm gonna do this.
Yeah, well, I think it kind of goes back to those building blocks I talked about. So first one, accessible. So you no longer you could sign up for an account in 5 minutes instead of hours at the branch. We issue your card right away.
Yeah.
So we made it very accessible and simple. The second one was on pricing, no minimum balance, no monthly fee, lower fees, we paid more interest, so there's better value. Customer experience, traditional banks often have dozens of different products that mostly do the same thing, and it's confusing.
Yeah.
So we just simplified it, one current account, one savings account.
Actually, what are the products and services available today in South Africa?
In South Africa, it's pretty comprehensive. So we have transactions, so payments, card, loyalty, rewards integration. Like here, we have credit card, we have personal term loan, we have merchant lending, we have a small business account.
Okay.
So kind of everything, call it everyday banking.
Everyday banking, okay.
Everyday banking, yeah. And we're kind of 3/4 of the way there here as well.
Right. And, I think didn't you guys coin a phrase for how you do things? Phygital, I think you called it?
Yeah. I think
Phygital, right?
It's kind of a mouthful. You can stumble on it.
Tell me about phygital.
Yeah, it ties back to this. I actually think maybe someone in a business in India first said it, but it's the combination of, it's not a pure digital distribution play.
Yeah.
And it's that concept of turning this supermarket into a point where you acquire customers, service customers, provide cash in, cash out. And beyond just the practical things it provides, it also accelerates trust. Because if you're walking into, for the Filipinos who are watching a Robinsons supermarket every week, and you're continually seeing the GoTyme brand, and you're talking to a GoTyme ambassador, it does two things. It widens the addressable market, because the pure digital play kind of constricts it usually to younger, more digital savvy.
Yeah.
Whereas we get people who are in their 50s up to 90 years old who use GoTyme.
Really? On their mobile phone?
On their mobile phone. But that's because they have an ambassador at the Robinsons supermarket who helps them sign up, teaches them how to use it.
Right.
So that brand tangibility and also piggybacking on retailers are actually more trusted in general as a category in emerging markets than banks. So you kind of piggyback on that trust.
So in South Africa, who's the sweet spot of your customer base?
It would be probably like it's still similar to any digital bank. It's still like the Gen Zer or young millennial loves it the most active, and is more willing to switch, I think, away from the traditional bank.
Yeah, and of the 10 million plus customers in South Africa, would you say more than half are these young people?
Yes, more than half would be under 40.
But still, you have some of the the fogies like me, right? They're on their mobile phone.
Yeah, the one who's going to the supermarket and shopping and wants to get better rewards.
Yeah. So I read somewhere that you had a very high NPS score in South Africa, Net Promoter Score, for those of you who are not familiar, right? Which is a measure of how likely you are to recommend the service or product to somebody else.
Yes.
Do you remember what the NPS in South Africa?
So South Africa, we're about 64, which is the best amongst our competitors.
Yeah.
But actually here, we're beating my friends back home. We're 72 here in the Philippines.
Oh, all right. Good for you. And why do you think they love you so much?
I think it's because I think our strategy is very simple. In both markets, the very top 10% gets what we call a preferred banking experience, right? They don't have to pay fees because they put enough money. They get higher interest rates because they put enough money in. They get a preferred line for customer service. They don't have to fill out all the forms themselves at the bank. Someone does it for them. They deliver the card. So our strategy in both markets is simple. We try to replicate that preferred experience, but for everyone.
Preferred for everyone. I like that.
Preferred for everyone.
Oh.
So, that's why, here and in South Africa, for example, here, we promise to pick up the phone or answer in-app chat in under 2 minutes.
Yeah.
And the average for the other banks is about a half hour of waiting time. It's about a
Yeah.
half hour waiting time in the branch. So I think it's this, treating everyone like they're a first-class citizen is the key to the NPS.
Do you think your marketing is any different from the traditional banks? The way you speak to customers, how different is it?
Yeah, I think we are. I would say a blend of lifestyle type branding and traditional bank branding, and we want to be.
It's you today wearing the business jacket and the black T-shirt, right? I mean,
and my GoTyme shoes.
And the GoTyme shoes. but maybe that's an apt metaphor, right?
Yeah. No, I think we want to be more relaxed and more warm and inviting. But at the same time, we are a bank, right?
Yeah.
We're regulated by the BSP. Deposits are insured. We get audited,
Yeah.
just like the other banks. So I think this is a balance. We want to be inviting, but also
Is that a tough balancing act? I mean, you need two very different kinds of DNA, right?
Yeah, I think it's interesting. You, on the entrepreneur side of you, wants to kind of have everyone on your team, not from banking, not from the traditional banks, right? Yeah. And you want to push the envelope. You want to be innovative,
break things,
et cetera. But the reality is that doesn't work. I mean, we're taking the public's deposits, so. We have lots of other people on the team still from HSBC, PPI, BDO. So, I mean, you need a balance.
Okay, and perhaps that is why, I read in an article that you are one of the few profitable digital banks in the world. I think there's some statistic like only 5% of digital banks today are profitable, right? Maybe we can dive a little bit into the economics of what you do. How do you get there?
Yeah,
and why are you profitable, and what do you think the rest do that makes them unable to do that at the moment?
Yeah, so I think in general, I think that 5%, which might be closer to 10% now, because a lot of us have been popping up above the water lately. So in South Africa, as you said, we're profitable. A lot of the reason why we're profitable, I think, is a function of scale. You need to get to scale. So the business model is more like an e-commerce platform where the unit economics are so much better than a traditional bank. Like, it costs us $5 to onboard a customer.
Yeah.
It's probably about 10 times a tenth of what a traditional bank would be. It costs a tenth of what it is to serve on a yearly basis. But there's still a heavy upfront cost on technology to make sure you get really good service. So, and the other thing about digital banking, which why I think in general, the public, the media, investors are being a bit impatient with digital banks being profitable, is also banking is a high trust game.
Yeah.
Right. So the only other thing I can compare it to maybe would be like a car brand. Right? So even if you have better product, better service, better pricing, it still takes 5 to 10 years for the market to trust you with their real money.
Got it.
So they kind of treat you as a secondary account, and then you get over the edge. So I think we've been fortunate in TymeBank in South Africa and on a good track here because we're getting scale quickly. That phygital model allows us to grow at double the pace of a pure digital play. The second thing is, I think if you look at the whole world, the more developed markets actually have a harder time. And the reason for that is competition. Yeah. So it's a lower interest rate environment. The competition in general, even though the big banks are saddled with the cost, they're slower than the digital banks. They're actually like a Chase or a Bank of America. Their apps have gotten better really quick.
Right.
Whereas in some of the emerging markets, the traditional banks have still underinvested in tech.
Got it.
So the competition, personally, I'm very happy to be in the Philippines and South Africa and not in the US.
Right. No, I've seen some models where you've gone from banking services to being a super app. So I think Tinkoff, for an example, right, in Russia, and that seems to explain at least part of the profitability, right? You build the platform, make the investment in tech, lower operating cost, right? And then more, I guess, a wider revenue pool.
Absolutely.
Right? Is that something that you see in this part of the world?
Yes. So for example, South Africa, I don't know the exact percentage, but a significant percentage of our income is not, so typically you have two sides on the banking income. You have the fee income, so that would be, when someone swipes a TymeBank card, we earn a very small interchange, very small revenue. Any fees you charge, any difference between what we can earn in overnight rate with what we pay you in savings. That's one side. The other side, so the liability side, the other side is on lending, right? There's more of where most of it comes from. But in a place like South Africa or the Philippines, where it's a highly prepaid market, to your point, you can also act as a very effective marketplace. So in South Africa and here, we sell airtime load, we sell vouchers, we allow to do bill payments. So actually those are quite high margin businesses, about 5%. So that, again, something that, in the UK where 95% is postpaid, there's less of that opportunity.
Now, everyone talks about fintechs, right? But there's also such a thing as TechFin, right? Which are the big tech platforms that build up a massive base and then start selling them, financial services.
Yes.
Right? Like the Alipays of the world, et cetera.
Yes.
Is that something that you guys, well, I guess you need to keep abreast of them, but are they like the big juggernaut out there in the wings?
I think for a while everyone thought they were.
Yeah.
So at first there was a phase where everyone thought the telcos were going to own this space because they had the widest distribution and pace of success. But largely that has not played out. And the next wave was the ride-hailing giants. Like, okay, these guys are going to be big players, Grab, et cetera, to go. My view on this is while, you can't ignore them as a threat. It's very hard, going back to this trust piece, to make the leap from e-commerce or telco to bank. It's a significant step up in trust. Also, like any business, it's hard. You need a lot of focus, and their core business is not this. That's what we found in the telco space. A bit frustrating, to be honest. Partnering with telco is that, they like the fact this is an interesting thing strategically with my mind. It could work. It's also a really good, cheap distribution channel for airtime, but I'm mostly focused on airtime, right?
Gotcha.
I think it's the same thing with the ride-hailing giants, but I will say the reverse is probably easier. Now, this is not something we're focused on that much, but once you have the trust and you're logging into your bank every day, selling you travel, selling you becoming a little bit of an e-commerce is easier from a trust perspective. So I think in the longer term, that's something we're excited about.
So GoTyme delivered burgers.
In time, yes.
Okay, so let's go back to how you started, right? You heard this, you were at this conference, you got inspired by M-Pesa, all the impact it was making. So just looking at South Africa, your business there, did it achieve what you were hoping for in terms of impact?
Yeah, no, I would say we are very proud of what's been achieved there. In particular, in the lower income segments of the market, we're the largest player already. But we're still just getting started. As I mentioned, the banking brand takes a decade to build. We're only halfway there.
And did you have to start, because of where the I guess the revenue pools live, did you have to start with a higher income at first and then make your way gradually down to the lower income? Is that what happened?
That's a very interesting question. So in South Africa, we didn't.
You did not?
But that was a mistake.
Okay.
Because banking is aspirational by nature. So everyone wants to be associated with a bank that is like a higher income band than they are today, right?
Understood.
So what has happened then in South Africa, and we have our work cut out there, is that we start more middle low income, but now, and we did that also because we only had a very slim proposition. It was one of those true startup MVP. But now that we have a full proposition, changing our brand positioning is actually quite hard. Whereas if you start a bit higher, which we've started in kind of emerging affluent is our primary segment in the Philippines, we're still attracting everyone because we're not rejecting anyone. But actually, that's a big lesson learned for us, is actually you need to start with a more aspirational brand.
So let's move to the second chapter of this interview, right, which is, new markets. Here you are, you've achieved what you set out to do. Fastest growing bank in Africa, one of the few profitable ones. Why set up in a place 1,000 miles away with a different culture, with people that you don't really know. What prompted you guys to do that? Tell me the origin story of GoTyme in the Philippines.
Well, it's interesting. The team always wanted to go multi-country from the beginning.
Okay, so you were global from the get-go,
but
in mindset.
In mindset,
yeah.
And I think a lot of us on the team, we're adventurous. Like we kind of did this also for the adventure, for the impact, not just to build a profitable business. So that was always on the cards. Now, when this phygital model worked so well, we then said, okay, where else can we go in Africa? Natural. We didn't obviously jump right to the Philippines.
Yeah.
The problem in Africa is there's not large consolidated retail. So you can't, in South Africa, we partner with Pick n Pay and Boxer. We got nationwide coverage, 1,000 stores. So the rest of Africa, fragmented retail, it'd be almost impossible to replicate that. So we literally did top-down studies of like the whole world. And actually Philippines on a desktop came out number 1.
Wow.
Especially with our unique model.
What were the parameters that got it to number 1?
It's we wanted a large market because a lot of effort to start a digital bank.
Yeah.
But not much more, whether it's 1 billion people or 10 million people. So, we're only looking at markets over 50 million. The second would be a good demographics. So high digital adoption. Market construct, we wanted to go to an oligopoly, meaning like 80% of the market share is in like a few banks. Yeah. And ideally not the most competitive offers. Yeah. Third one is regulator. So we wanted someone who would be open to foreign investment and be open to EKYC, offshore cloud, all these things. And the last one, and probably most important, is that we need to find a partner because we're retail-led, yes. So we can't go anywhere.
Right.
Which
that seems to be part of your playbook, right? This is partner-led business model, right?
Yes, definitely.
Yeah. So how did you think about market entry back then? I mean, what were the things, having learned for the last 5 years, right? How to do things, what things to avoid, what things to do. What, in your head, what was the go-to-market strategy?
Yeah. So first, maybe to finish also on how we ended up with the Gokongweis and in the Philippines was because they checked all the boxes, but so did others. We ended up at almost doing a deal at one point in Egypt, which thank God we didn't, because that ends up being a really tough market. We applied for a bank license in Pakistan. Yeah. So Philippines launched new digital banking licenses about 4 years ago. Yeah. As soon as they announced that, we scrambled to find a partner. It was another bit of luck, as you mentioned, is a key ingredient. The Gokongwei group in Lance had just decided they want to build a digital bank. So at the time, Robinson's Bank was, was I think number 17 in the market. Probably hard to go up to top 5 with a physical strategy. So they were actually looking for a partner. At the same time, we came knocking saying, you're the only big retailer who probably makes sense because SN has BDO. Right. No, but
were there other potential partners that you talked to?
We spoke to others, but in this market, right, you really have 2 big players. So
yeah. And so the stars, I guess, were most aligned, right?
They aligned, and I think 3 months later we had a term sheet.
Wow.
And all of this was done remote. So
this is done during COVID.
During COVID. Lance and team couldn't go visit South Africa to make sure we exist.
That's an interesting question, right? When you're doing deals, how do you build trust if you haven't met someone, right? How did you do that?
I guess that work? Lots of time on Zoom. And lots of, I think it was a massive leap of faith, if I think back, especially on their side. Yeah. We actually had not, even though it looked the best on paper, we had never stepped foot. Most of the key guys in the founding team, we had never been to the Philippines. So the first time I landed here was when they let us in 2022, and we had already had 100 people, and we were 3 months away from launch.
You'd already signed the deal.
Oh yeah, we had.
So you launch in a market without having met the people, without having done in-country market research. So that's pretty cool.
Yeah. So you can see we're in it for a bit of the adventure too. We're a bit crazy. But sorry, I went off topic. But back to your go-to-market.
Yeah, I mean, so having learned, everything that you did,
Yeah.
landmines to avoid, gold to go for, both of these. What was the playbook, you think?
Yeah, the playbook, we really liked the impact of this hybrid model, so we took that here.
Yeah.
It was, I'll tell you though, it was a lot of anxiety, especially on the time side, because we were like, okay, we've sold this idea of this hybrid model being like the secret weapon to scale, but we didn't see it was going to work yet, but we brought that.
Mm-hmm.
And then I would say that the other big learnings were was to scale slower. So we didn't do 600 kiosks at once, we did 100.
Yeah.
It was to reposition brand a bit. So to be more aspirational, so we had a fuller proposition, speak to an aspirational segment, and then everyone else will follow.
Just on that, do you guys, this sounds like a funny question, do you guys speak Tagalog or English to your customers?
In our marketing and branding, it's almost exclusively English.
Because it's aspirational, right?
Yeah. But if you send us an in-app chat or you call us, we'll speak to you in either.
Understood.
But mostly Taglish.
Yeah.
Even on social media, you see we have very large community groups. We have 2 Facebook groups of almost 100,000, and it's a lot of Taglish. So I have to hit the translate a lot.
So if GoTyme were a person, what kind of person would they be? As you think about your positioning the market, right, and the branding.
The brand position, it's I'm going to use when my chief marketing officer says, it's a zillennial.
Zillennial,
yes.
What's that?
This is a new word, I didn't know it existed. So it's an adulting Gen Zer or a young millennial. So that's it's someone, let's say, who's in their second job, they're 28 years old. It's in between the Gen Z and millennial, is who we're primarily speaking to. So that still has fun and energy, but we're a bank, so we're a bit more serious. And what we've seen after the first year, before we really zeroed in on that, is that the customers who adopt us, who love us the most and are most active, is in their mid to late 20s.
So speaking of love, I hear your NPS in the Philippines is even higher than your very high NPS in South Africa. Talk a little bit about that.
Yeah,
and why you think that's the case.
Yeah, I think that's actually probably the last big learning that we took coming in here, is that we scaled too fast, and therefore the service was it was kind of on par with the other banks, and it's since improved in South Africa, so we're leading there. But we wanted to be a step change and to steal a bit from New Bank. They actually set the bar. They sit around early 80s, high 70s. So we said, okay, in the Philippines, we're going to over-index on customer service. For example, we launch with in-app chat, and we launch with a commitment that we're going to pick up the phone or answer in 2 minutes. So a much bigger emphasis there. The other thing is that we invested more in the app design and development. So, I think, to be honest, the founding team, we came from B2B originally, as I told in the story. So I think the first time around, we discounted brand and UI and the softer side, right? Because we were more like, okay, if we price it right, they're going to come, and this branding thing, that's a wishy-washy stuff. So this time we really invested in that, and what we say now, what we've found resonated, is that people love GoTyme because it's a beautiful experience. It's a beautiful app. It's fast. It's simple. So our tagline now is, it's like GoTyme, it's banking made beautiful.
Nice. And are you happy with the results so far? How's it been going for you guys?
No, we're over the moon so far here. We're 19 months in, and we're over 3.3 million customers. And now I think we're the fastest growing bank in the Philippines now, across traditional or digital.
And most of the business is coming from what part of the business? Is it payments, loans?
Still heavy on transactions and savings and loyalty. So we have the partnership with the Gokongwei group. Their loyalty program, which brings together Cebu Pacific and Robinson's Retail, is embedded in GoTyme. So you get points multipliers, points to cash. So that's core. But we have launched a small business lending product, which has been very successful in South Africa with PayMongo, another endeavor.
Talk about PayMongo. What are you doing with PayMongo?
Yeah, so the challenge, very similar to the consumer side and the SME side in a place like the Philippines or South Africa, is access to credit is really hard. So imagine you're, in PayMongo's case, a PayMongo customer. You have a small fashion business, you sell stuff online to the PayMongo platform. Your ability to take your transaction history, let's say, and go to a traditional bank and get working capital to expand is very difficult.
Yeah.
You want to see audited financial statements, et cetera. So the small and medium businesses end up paying unsecured consumer credit rates. They might have to actually put their mortgage on the back of the loan, right? So that's the big gap in the market. So what we do is we partner with a partner like PayMongo. We integrate with them. They share the data on their merchants anonymously.
Yeah.
We score that. We effectively build a virtual income statement, and we say,
what kind of data are you looking to do the scoring?
it's their sales data, but quite granular, like transaction level, how many transactions per day, average value, what does the volatility look like, what does the trend look like, and anyone who's been on the platform for 6 months, we can make a decision whether we lend to them or not.
So you can almost reverse engineer a P&L.
Exactly, that's what we're doing.
Yeah.
So then the experience for the merchant is that when they log into PayMongo, they have this thing called PayMongo Capital, powered by TymeBank, and it offers them, do you want 100,000 pesos to grow your business? And if they click yes and accept terms and conditions, within 24 hours it's funded, no paperwork. And then on top of that, we don't collect on a fixed monthly basis, which in general is bad for a lot of businesses because there's seasonality. We actually collect as a percentage of future sales. So if their business does well that month, we take 10% of it. If it does bad, we take 10%. So it kind of
great for the
flows
for the
with the business, and very simple. So that is actually our largest lending product in South Africa, and our first partner is PayMongo here.
Now, there's another partnership, I think, that ended up as an acquisition for you guys, right? Which I think is already public, right? Savvy.
Yes.
That you guys acquired.
Savvy.
Savvy. Talk a little bit about, what you saw in Savvy, that made sense for what you're trying to build in the Philippines.
So Savvy is an interesting business. It is predominantly a lending business where they partner with corporates to provide unsecured credit to their employees. So they have about 160 corporates they've signed up who have access, like the total employee base of that 160 is almost 600,000 employees. They integrate into the company, and they can offer credit, and this is chunkier loans. So this is maybe I have school fees, or I'm gonna, I need to buy a large appliance, or et cetera. Even down payments on homes, used cars, et cetera. And what happens today, and it's similar to almost the SME, for someone who works at a BPO, for example, they go to get unsecured credit at a bank, or more likely a non-bank lender, they're gonna pay over 100% interest rate, right? Because Savvy partners with the corporate to collect the repayment of the loan directly, they can drive down the cost of credit.
Got it.
So this is quite exciting. So we like it for the lending play, because it helps scale that side of our book, because we're raising deposits much faster than we can lend out. So that helps there. But the other thing why we're very excited is that at the end of the day, our vision is to be, the largest retail bank and most loved, largest and most loved.
That's a very small ambition. You're aiming too low, Nate. Come on.
But if you double click on that, what do we exactly mean by that? We actually want to be largest in terms of primary bank customers. And where do you really get, where do people generally have their primary bank relationship? It's where they get paid. So we had separately last year, we had launched a pilot of payroll. Accenture was our first partner. And we got lots of adoption. But it takes a long time to sign up corporates. Now, Savvy has 150 corporates, which we can work with them, hopefully not just on the lending side, but also payroll.
Just on this topic of sort of salary-based lending, right? I know about 10 years ago, a big, major international bank that had an operation here started to salivate, looking at the BPO industry, right? With, over 1 million people getting paid very handsomely, right, by Philippine standards. And so they decided they would lend to these BPOs, right? Similar model, which is at no risk to the BPO,
Yes.
right? Your employees get access to all this credit. And my understanding is that after trying this for a year or so, they ended up just folding the whole thing because it's an industry with very high attrition,
Sure, yeah.
right? So I think attrition in BPO is something like 30-40%, right?
Yes.
Have things changed today, or do you stay away from particular industries where there's high turnover?
No, so we haven't. This is why we were so excited about Savvy, because they got really good. Because it's a very different credit underwriting model.
Yeah.
Because to your point, you're not underwriting necessarily the credit worthiness of the individual. You're underwriting the chance they leave.
Yes.
Because otherwise you're fine, right?
Yeah.
So they actually, in the team, Liam and Benoit and Javier, in particular Javier, one of the co-founders, spent 10 years before this in emerging markets on alternative credit. Over the last couple of years, they built scoring models that use all of the employees' data, including what their role is, how long they've had tenure, previous jobs, how many times they've switched previous jobs, to actually build scorecards that are predicting churn of company, opposed to the traditional underwriters, what probably went at it more like a regular unsecured loan. And they've been able to control risk to the point where actually more than half of their lending book is with BPO.
Really?
But they've been able to control loss rates. Yeah.
That's fantastic.
Yeah.
It's good to hear that.
Yeah.
Is there any AI magic sprinkled in there somewhere?
Some of the underwriting, so the credit scoring models are using AI methods to improve the models.
Yeah.
But nothing like crazy new in the last couple of years. Actually, AI has been used a lot in credit long before.
Yeah.
But the LLM side of AI hasn't done anything particular for them.
So next 3 to 5 years, what's in store for you guys? What are the big mountains to climb?
And we have huge mountain to climb here. We want to be the largest and most loved retail bank.
Yep.
So I think that's plenty for the next few years.
Okay, very good.
But yeah.
Well, maybe to close this conversation, right? Talk about my favorite topic. If you think about the typical trajectory of an endeavor entrepreneur, right? It starts with dreaming big, and then you go to scaling up, right? Hopefully faster than before you met Endeavor. Yeah. And then once you become, you've achieved a certain amount of success, right? Then you start paying it forward, right? That's very much central. It is the central ethos of Endeavor, right? This is whole ethos of paying it forward. And what we like to say is success isn't simply a matter of, your market share, your place in the market, how much money you have in the bank. It's actually your impact in a wider ecosystem, right? Which is an ecosystem we're trying to catalyze and build up here in the Philippines. So maybe just share some of the things you think about when it comes to paying it forward.
Yeah, so I would say, and we talk a lot about this in Tyme from a culture perspective. If I think about why I've stayed here for so long in the business, I was very young. I was 28 when I joined, and was not the CEO. I was taking care of product of a very small business back in South Africa. And the business has let me grow, and I still pinch myself of where the privilege I have today. So I think internally we talk about, there's a statement in our culture deck that says a big part of your job is finding someone to replace you in your job. Yeah. Right. So in that growth. So I feel a huge obligation to, replicate what I felt as part of Tyme to others. Maybe more broadly and within the Endeavor ecosystem, I love and kind of jump at any opportunity to collaborate with other entrepreneurs. Paymongo being the example. That's Endeavor gets a bit of a preference. Yeah. On a personal level, I've invested in the Catalyst Fund, through the team here.
Catalyst 5 coming up in first quarter of 2025.
There you go. But I think longer term, I think about it in two ways. And continue to invest is something always fun if I have the privilege to be in that financial position. The other one is kind of getting other people to be entrepreneurs or getting other entrepreneurs here. Because I've been, one of the best parts about Endeavor it's interesting because I also joined Endeavor during COVID. So I joined South Africa Endeavor,
Yeah.
but I've actually never been to a South Africa Endeavor event because I was in purgatory in
Yeah.
Hong Kong. And then, you guys welcomed me here. It was an acceleration of my network. So kind of, I think, trying to convince other entrepreneurs to come to the Philippines.
Yeah.
I think this is such a warm and open market. I think the market is, I always say, I think we're in the best market in the world.
Yeah.
So helping other entrepreneurs come here and the entrepreneurs here, whatever I can do to help would be longer term.
All right. So I guess in closing, congratulations on what you've achieved so far, and lots of luck with your really noble and large ambition.
Audacious goal.
Right. Yep. And we look forward to seeing you be one of the big multipliers in the Philippine ecosystem. So with that, thank you for coming to the show.
Thank you, Manny, and thank you for the continued support of Endeavor.
Always.
It's
We're
been
here
awesome.
for you, man.
All right, thank you.
All right. That was Nate Clarke, CEO of GoTymeBank, who combined the capability and experience of TymeBank South Africa with the powerful Gokongwei ecosystem to build the fastest growing bank in the Philippines. Thanks for tuning in to Rappler Presents HIPE Stories. Follow HIPE on Facebook, LinkedIn, and Instagram. Also follow Rappler's YouTube, Facebook, X, Instagram, and TikTok. If you want to continue this conversation, you can do so in the Money chat room of the Rappler Communities app. Download on your mobile by scanning the QR codes below. It's available for download on iOS and Android. Just register for an account and click on the Communities tab and join the Money chat room. I'm Manny Ayala, and you've been tuned into Rappler Presents HIPE Stories.